What's going on? Just recording this for myself, going over these trades that I just back tested on EJ. So let's have a look at what I was looking at. So at the time, I just put bar replay on and I came to this point in time. I think it was actually a bit earlier. And what I was seeing was that this was the daily leg. So this leg broke structure to the downside. Here we can see we were bullish. Let me just get the brush tool. So we can see we're making high, broke all of this previous structure. Okay, here we have a sweep as well. And then at this point, we went bearish and we set a new low. Now, what the expectation of order flow is at this point is to come back up into premium, set a lower high, and then continue on to make a lower low. So knowing all that, knowing that we've already retraced back into premium, you can start looking for things to target for then continuation shorts. So if we drop down to the 4 hour, okay, see that we have this nice doji candle here, which is a demand flip, supply flip. So on the lower time frame, that would have been nice demand here. You can see with this doji, so first interaction pulled back up. This interaction here, it swept, but didn't actually close below. And then we came back up. So this is actually a sell to buy or a pivot supply on a lower time frame. And the following candle then initiated the breakup structure, which initiated all of this bearish momentum to the downside. So if we do retrace back into this point, and as you can see here, we've actually had a 4 hour chock. This is quite a significant chock. And even if we were just to play it up here, we can see that we could just be tapped in from this extreme. However, we obviously don't want to be playing 4 hour zones with massive stop losses. So we will break down this whole chunk of price action here and see how we can enter on the 1 minute. All right, so let's jump on to the 15. So I've obviously already marked up everything here. I just took these trades as back tests. So the first thing I was sort of looking at is prices now come into this 4 hour zone. For me, this is a confirmation if we see a follow through on the 15 minute as such here, the chop down, that we can now start looking for shorts. So you can see here, I've marked this chop. I've also marked this overall chop as well. And you can see the difference in the trades when we go to the right as to the significance of having the minor chop within here, as opposed to this larger chop to the downside. Okay. So we've tapped into this 4 hour zone. I've used this here because I didn't think that that was enough liquidity. I didn't think that was enough liquidity. We could use this as our chop and we would have already been in on the lower time frame in this week, but I don't like playing it like that. I'd rather wait for a significant change, considering how bullish we've been leading up to this. So you can see that we swept the liquidity here. Okay, we've interacted with this demand quite a few times, and then we've left this flip. And this flip is significant. This is something I need to get better at, because it swept significant liquidity. Okay, so when we have these stacked highs and then you see price tap into them, sweep, and you want to be trading away from the sweep. Okay, and this sweep here, you can see quite a lot of bearish momentum entered just after. We can see even in this vital sell wick, there can be a refined supply zone, which we'll use to the right. And at the time I'm seeing this, okay, we've swept this liquidity, we've chopped to the downside. And then at this point, I was like, okay, maybe price isn't going to return back up, but we continue on. So we have this breakup structure to the downside, and then we have the major chop of the whole range. So that's actually our 4 hour chop. Just mark this up. Okay, so that's our 4 hour chop. Now we want to ask ourselves, what happened after this chop? Was it simply just a sweep where we broke and then it came initially back up? No, okay. We built some liquidity here. We've swept the liquidity, but we've actually now printed equal highs. So when I use this as opposed to this is liquidity to be swept. This isn't to indicate that any liquidity has been swept, because they are just equal highs. At this point, there is trades to be taken within here, but I'm not interested in that. I want to see when price reacts, comes back up into this zone, how we react. So we can see here, if we just move across, we had our first initial tap of this zone, okay, ever so slightly, just there. So With this, we need to be careful. We still haven't reached our refined flip zone, and it's just touching this. I would see this to be later swept, but we can start trading off here, just having smaller targets. So if we're getting in here, we're not trying to target the 4-hour lows because we're looking for this to be swept. And just essentially this being inducement used as liquidity for the larger move later. But we can still be taking positions here if price gives us a reason to enter. So we can see on the 1 minute, we've tapped in, we've swept the liquidity above these highs, we've had a shock to the downside. This here, this week on the seconds would be a flip, but it hasn't actually swept any liquidity. And this is the reason why at this point, we would not use the flip and we would actually wait for the extreme. Obviously it's right next to each other in this given scenario, but the reason as to why we won't use the flip and why we'll go to the extreme is because this is just one candle down. We didn't actually set any highs and then sweep them, then go down. If we had, we could play the flip, but in this case, we cannot. So this is actually a bit of a riskier trade because we can see here that demand is actually still in control. However, we can still play this just given that we've built the narrative, we're looking for lower prices, and we've tapped into this flip zone on the 15-minute. So we've broken structure to the downside. So we haven't broken structure, we've chopped to the downside. And then we see the price building liquidity through here. All of this is liquidity to be swept. Sweeps it in this candle, taps into this, swept the liquidity above this high here. And we see an instant V-shaped reaction to the downside, which is what we like to see. 1.5 pips covers the whole POI, which is great. And then my rule is, of course, to take 25% partial at 4R. And then, as I said, just because I'm expecting this to be swept, I'm not looking to hold this forever. So the zone that I had highlighted is this zone here. Okay. And this is actually the zone that actually calls the breaker structure. It hasn't been mitigated. And we have all of this, this liquidity resting above it. Internal range liquidity. Okay. So we've built up all of this internal range liquidity, tapped into supply, chopped, playing the extreme, broken structure now to the downside, and I've taken my partial. And then the remainder of my position, I'd be looking to take at 50% or EQ of this demand zone here, which actually pushed us into supply. Cool. So that's 25% at 4R, that's 1R, and then 75% at 9.27. Let me just quickly calculate what that is. 0.75 times 9.27 is 6.95 plus 1. So that's 8R this trade. Okay. In the span of an hour and 7 minutes. And then you can just be out of it. You know, you don't want to have to hold partials and things like that at this point because we hadn't actually tapped deeper into this supply zone yet. Cool. So we continue on, and we're sort of glad that we did get out of there. To be honest, maybe I could have taken 50% partial here and left 25 to run, which would have taken me about a break even. No harm, no foul if that was the case. But personally, if it's still within this sort of this range and this consolidation, I'm happy to take the rest of my position off here. And my rule will be that if it's greater than 6R, then I will take it all here. Now we can see this ugly sort of price action coming back in. This is probably spread hours. Yeah, this is spread hours, and you can see the candles are forming really gross. And then you can see here, now we've tapped into this refined flip, which is now great. We have also swept the liquidity above here. We've chopped. And now again, here, this flip, you can say, why didn't we trade up here? So we have this demand, price interacted, pushed up, then broke and gave us the chock. But again, there was no liquidity swept here. This candle trades below this candle. If we had a few lower candles and then this candle was to the right of them and it had swept the liquidity, then we could have traded off of that flip. And however, that was not the case here. Technically, so you could see that this sort of played out. If you had a really tight stop, you'd probably get 5 or 6R out of that leg here, but that's not what I'm interested in. I'm interested in high value trades. And we can see this zone here. So this actually, this candle, so the liquidity above this candle. Ever so slightly, yes, but however, it's still there. And if we actually, I can't get down in seconds that far. No worries, let's go back to where we were. Australians happen. You can see that this candle here traded higher than this candle, swept the liquidity above there. On the seconds, there would have been a range inside here, which was swept. And there's not really a nice candle to trade off here. And I'm not really expecting price to come all the way back up to this extreme now that we've mitigated almost 50% of this refined flip zone. So as price comes back into here, we're building a lot of liquidity. So this was all inducement above here. It's the cake, it's the chocolate bar before the cake. Not interested in getting in at any of these levels. We are interested in getting in here. Okay, could probably even refine that down to this candle. Have a need a tighter stop. You could have played this with a 1 pip stop if you were to do that, or probably be taken out. That's fine. That's not how I wanted to play it. I wanted to play it off the bottom of this 1.5 pip stop. Swept the liquidity above here, and we are in the trade. Now, again, because we're still range bound, I'm not expecting this to break and go all the way down to hell. I'm happy to take my partials at 1 to 4, and then take the remainder of my profit down here at this demand, which pushed us back up into this flip. Okay, mark this out as well. The demand. Take price on. You can see that's achieved quite quickly. Given that my target was so close to the 4 hour, I would still take my profit out. That's the rule. So I would have 6 pips. Yeah, 25% at 4 hour, and then 75% at 6.87. So that's 6.1. Happy days. Again, very quick trade. 29 minutes. Your week's done. How good's that? Cool. Continue on. Now, this chop here, this is the really significant chop. And as I was saying at the beginning, when you notice the difference between internal chops when we're range bound, as opposed to the whole external range being chopped, the result of that is extremely significant. So if we play price on a bit, you can see we didn't actually get the chop there. Came back up, we've built more liquidity, buy side liquidity and sell side liquidity. If we had stayed in this entry, we would have obviously been taken out at break even here. But like I said, just because we are range bound, I'm taking the rest of my position off. I'm not holding any partials here. I'm only holding partials if we are pro trend and have broken the range. So we could be coming back up to test this flip. We'll probably see there'll be another trade in here if we've taken this high, taken this low, flip zone. I'm not interested in that at the moment. I've already taken these 2 trades or 3 trades, and now I'm waiting for this to be broken and then be trading the larger chop. Just move up to the 15-minute. You can see this is very compressed price action, not really nice to be in. Cool. At this point here, we can see that price has firstly on the 4 hour tapped into the higher time frame supply zone. We've had internal chops in here. We've had a 15-minute chop in after the 4 hour had been mitigated. Cool. We've left this flip. We've traded off this flip, however, because we were still range bound. We've now taken the external range liquidity. So I know there's a lot of X's here, but we're looking at this high, the sweep of that high here into this flip. And then the lowest point of there is here. So when this has now chopped, this is extremely significant. And if our analysis is right, we should now be really falling down because we are pro trend on H4, the 15-minute and the 1 minute. Let's drop down to the 1 minute. Go back just a little bit. Okay. So I'd marked out that this was the low that I wanted to see gone. This here, I wouldn't really classify as a chop because we've got to ask ourselves what happens after the chop. And in this given scenario, even here, we've swept it, we've come back up aggressively, swept it, come back up aggressively. Now, all of this here, this is all liquidity being swept. And now this full body buy to sell, this is the flip zone that we want to trade on, okay? So here, this is where I would take the flip as opposed to looking for anything in the extremes because we've built liquidity after hitting this demand zone. It should be gray. We've hit this demand zone, built all this liquidity, swept all of this. Okay, you can even use this. A lot of liquidity in here, swept, and then we've had an aggressive break to the downside. And then after the break, you can see bearish momentum continued. It wasn't like this where a couple of candles closed below and we came back up. We actually had bearish continuation here. So at this point, I'm happy to set a limit off of this flip. I think I played this with a 2 pip. Yep, 2 pip stop loss. Cool, tagged in. Bit hairy there at the beginning, depending on your broker, might have been taken out here, but obviously this is just a back test, so we're playing it as if we were still in. Broken structure, first time we break this structure, I want to identify the candle that caused the break and not just the wick, but the continuation, as we can see a later mitigation of this zone. So broken structure here, I will take my 25% partial at 4R, as always. Okay. Now, let's identify where the next target should be. So firstly, I was looking at this and there's nothing really nice to target here. Maybe we could target something in this zone. Okay. However, I'm also seeing that this had mitigated this, but we've left a lot unmitigated in this week. We go down on the smaller time frame, at the lower time frame, sorry. However, even then, if we look at it in a larger scale picture, all of this is just liquidity waiting to be swept. Okay. Have a liquidity void here. And again, because we've paired this with higher time frame analysis, we're looking for all of this to now fail. We've taken all the orders from this area here. So this is when the price was in fair exchange, and now we're aggressively breaking to the downside. And down here was actually the zone that I was looking at. So we had, this is where the 15-minute chop to the upside occurred that pushed us into that higher time frame H4 supply. So this is a very significant level. We came in quite bearishly, quite aggressively. We reacted nicely, V-shaped reaction out of demand. And then this is what actually caused all the bullish momentum that pushed us up into supply. So I'm waiting for price to come back here so that our BFIs can close out the rest of their orders. And we can see we had a nice chop. We swept liquidity below, swept and then broken above. This is actually a window of imbalance as well. And as we can see from this doji, when we interacted with this supply on a lower time frame, pushed down, and then price pushed up and broke through this level here. Okay. So this is a very interesting place to take final partials. My next place of partials after I've taken 25% at 1 to 4 is the next sort of zone where I could see a reaction off as long as it is greater than 6R. And if 10R is possible, I would take 50% at 10R. I'm not greedy. I want to get paid. So let's see what happens. So now we know this is the final zone that we're looking at. Nothing really in here to react off of. It was just sort of continuations. Maybe we could see something in here. So supply. Let's just actually go back to here. To the 1 minute. Fine. Candle didn't sweep any liquidity. I'm taking this zone. This candle here swept the liquidity above all of these highs. Then we had the bearish momentum, then the fall. You can see the first interaction. I'm not looking for a flip down here. I'm looking for a flip after the reaction, which actually broke through after it reacted. So you can see here, okay, we've reacted, pushed down, and then we've pushed up. This candle traded below these two candles. So you can see this is a flip zone. Actually just noticing this now. I didn't notice it in my previous backtest. So use that as a demand flip. Okay. Wouldn't really be wanting to use anything here because we traded below these lows, but these are more or less equal lows. So if we were looking to go any lower, maybe something in here. So this candle you can see swept the liquidity under here. But again, this isn't after the reaction to supply. This is. So price came into supply, reacted, pushed into supply again, failed to break above, pushed back down, swept the liquidity, then we broke. So this is a very interesting zone. Let's see if this actually aligns with what happens in the future. Might get a reaction after this point. Just go to the 15 minute. One. And you can see here when we came into this flip zone, we had a reaction, but it wasn't sort of enough, meaning there wasn't enough buy orders in here to overpower the sellers. We did get a reaction, push through, leaving a flip here. I won't be looking to take any scale-ins at this point because I know that the breakup structure occurred up here. And as we can see, this is where price came back up to mitigate. After having taken 4R, we could look at taking a scale in here. Given how big the stop would be, let's see how far up can we go to get 2 pips. Okay, perfect. So because my stop was too big, I'm going to push this up to where I can get in 2 pips and cover the POI. And then again, the same rules apply with my partial taking. Overall, we'll be looking at that. 8 pips is for my risk is 2 pips. And then to be honest, let's have a look at what this zone here. 18 to 2, that's 9R. Yeah, definitely taking 50% partials if we come back down to here. Okay. So you can see we're in this trade, breakup structure, identify the candle that caused the breakup structure, looking at potential scalings in the future here, came back, interacted with this demand flip from the left. It failed to hold, push back up, swept the liquidity above all of here, push down. I've taken 50% partial at 10R. Price is now correctively pushed back up. Now that I've taken, what's that, 5 plus 1, that's 6R off the table, I'm happy to take another scale in here with the same risk and then move my stop to taking 25, sorry, not my stop, taking 25% partial at 4R again. So up 7R in total, and then we play price on. You can see we're now reacting from this supply zone here is holding. Just draw that up. Really nice supply chain now, which is nice. And these are the trades you want to be in. These are the trades that pro trend, broken external range liquidity, sorry, swept external range liquidity and broken that internal range, the range bound that we were stuck in the consolidation with really big targets. Obviously, I'm not going to hold full volume to those targets. I will be trading them quite conservatively. I only aim to make 5 a week, and you can see from these 3 trades, it will be over maybe 30, 35 or something like that. We'll calculate it at the end. So now we're in the second trade as well. We're still holding 25% volume in the first trade. We can see price pushing quite nicely into here. So the reason why I'm marking up this zone as well is this would be targeted. This low would be targeted as this low failed to take out this high. It's a targeted low. As I said, it's close to 10R. I'm more than happy to take 50% partial. I don't want to be sitting at the computer all day. And this way I can make sure that I'm going to reach my weekly goal. So now if we look at this, this is in the span of 2 hours and 23 minutes. We've got 1, 5, 6, 7, plus 4.5, 11.5 are in 2 hours and 23 minutes. And again, this was actually at a good time too. So that's between Frankfurt Open and London Open. So that's 6:30 p.m. London Open is at 7. And that's your fortnight done. Yeah, 11R in 2 hours and your fortnight's done. So at this point now, I'm just going to move my stops to break even. I'm not going to trail it aggressively. I'm going to go off and do other things. And I'm going to leave my main overall target at these lows down here. If it hits, it hits. If it doesn't, it comes back up to break even. I've got 11.5R off the table. Just going to go up a time frame because it does take a little while, but as you can see, does that quite nicely. So I was expecting some sort of reaction off of this zone. So you get one. Fails to hold, comes back down quite aggressively. There's going to be a flip in here on the lower time frame, which if you wanted to take a third scale in, you could, but I'm not interested in that at the moment. And you can see price just falls very, very nicely. Filling in all of this liquidity void and hits our overall target. So even here, why is demand holding? It's holding to create liquidity for supply to take over and push us further down. And we hit our overall target. So from the span of the first hour, sorry, the first trade, 7.5 hours. Okay, but I had already taken 11.5R off the table within 2. And then we've got 25% remaining on the second position at 51R, which is an additional 12.75. And I'm just going to say this is 51 just for A's sake. So times that by 2 is 25.5R plus 11.5. That is 37R for this trade. Okay, 37R plus 8R plus 6.15. 51.1R in total over the span of 2 days and 18 hours. So you can see how simple it is, how well the actual strategy works. Just need to be consistent with it. Trust your edge. Big thing for me here is identifying when to take the flip and when to take the extreme. So as I've mentioned quite a few times now, if it has swept liquidity, I will always take the flip. If it has not, I will always wait for the extreme. Sometimes your trades will get missed that way, but it will probably keep you out of a lot of losing trades too. So that's the way up you've got to make. And again, the other thing for me to remember is when we are range bound as such, and we haven't really gone in. So up until this point, we'd only just tapped this flip zone. We hadn't gone for a deeper mitigation. Take your partials at 4R to cover your risk, and then don't only take 50% at the next zone. Close the rest of the trade off. Sometimes you will close it and it will continue to fall, but a lot of times it will just keep playing the extremes and it will take you out at break even. So just for ease sake, wait until this external range is broken. Then that's when you can hold more volume for larger targets as such. So yeah, just wanted to record that for myself. When to take flips, when to take extremes, seeing how much R there is actually to be made. So you don't have to think that you're always needing to be at your computer every minute. Remembering to remember that when you take trades after the external range is broken, you're going to get much larger moves. And yeah, that's why I wanted to jump on here and record this time. Thanks. If anyone does end up watching this, I'm not sure if I'll upload it or not. It was just more so for myself. But a few people have said that they've found a lot of benefit in the videos I do. So I might actually put this up on YouTube. Any questions, leave them in the comments below. Otherwise, I hope you have a great weekend and a great week next week. Thanks, guys.